Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important LFJ. Signature Bank failed to understand risks associated with crypto. FDIC chair. BlockFi used customer money to buy $30 million insurance. Creditors claim. And SEC Chair Gensler claps back at Coinbase, says crypto rules already exist. Do they, Gary? Do they really? Tell us what they are. All right, on to the market. Current market cap, let me refresh this real quick. Current market cap, 1.126 trillion. Bitcoin dominant sitting at 14.6%. ETH dominant 19.4. Way up slightly from yesterday. 47 will get you an ETH transaction. Look, you know what's crazy? If you've been here long enough, at least since 2017, even though we're in the middle of a full-blown bear market, potentially the bottom of a full-blown nasty bear market, what is interesting about this time around is our bottom of our bear market is over $1 trillion. And I know we went a little bit below that a couple times, but you get my point. I think, like I said, I've said earlier in videos before, I think we got down to like 160 billion as a market cap last bear cycle. Somewhere around there, 200 billion, which is significantly lower. It's absolutely insane. As well as what's been really interesting about this bear market for me is there's been a lot of pumps. There's been ways to make money. There's been a lot of things that have moved and made people a lot of money. It's been very, very intriguing. All right, with that being said, red day, guys. Bitcoin has trended down after a little pump that we got. And we're going to look at that here in just a second. But yeah, nothing really going on, mostly red. CFX. 9.72 up on the day. Yeah, let's go ahead and just jump over it. God, it's been boring. It's been so boring lately, guys. I'm sorry. All right, Bitcoin, 4 hour. After our big nasty dump, we bounced off of my last buy order, 25,816. Got that filled. Thank you. Here's our issue right now. Is this nasty little situation right here. We got up above this 2310, which is my buy order previous to this one. And I was hoping we were going to turn it to support and continue going, but we got rejected hard off this 27,594. Let's call it 27.6. And then we just came down. The scary part, well, first the good. The good, we got caught. We got caught here at 26.97. Let's just call it 27. I'm pretty sure that's what the range is of what people are buying at. 27 even. We bounced off of 27, but the scary part is this original support, this 2310 or 27.310 is now looking like strong resistance, which could potentially mean that we're going to continue to trend lower. The reality is that is all I've got for you guys. Let me look at some other time frames, a little bit larger time frames. See if I'm seeing anything. Any indicators tell me that, like any, blood diamonds, things like that. Oof! Look at that wick on the 22 hour. A lot of support right there. Yeah, let me go a little bit lower. Let's do the 30. I'd be looking for this 26.7 to be support. Keep your eye on it on the 30-minute. If we do break that 26.7, we could potentially continue trading down back to this 25,816 is what I'm saying. 1 hour. Yeah, 26.7. Looks like decent support. We'll see if it holds. If we do break this, we'll call it, like I said, I have a line at 26.977 because we did bounce off of it perfectly right there, but this could just be 27. These could be buy orders at 27 that are supporting this price action. Again, that's what I'm looking at, guys. We're rolling over, and we could potentially continue down because this is turning into, like I said, resistance. Or another possible idea is we range in this for a little bit before Bitcoin decides to either go up or down. But that's it, guys. Nothing crazy going on. Just sideways action after this big dump. A little bit of a pump that we got, but still ranging, trying to figure out what it wants to do. Even our ribbon on the 30 has turned dark, which is bearish. Or this is the 1 hour, excuse me. The 1 hour turned bearish. We'll see what it looks like on 4. The ribbon never even turned on the 4. All right, guys, that's all I got for you for Bitcoin today. Per usual, this is not a trading channel. I am a terrible trader. I don't even know what I'm doing half the time. Don't pay attention to me. I'm just a random dude in a room making YouTube videos, talking to himself. Outside of that, I'm not a financial advisor either, and this is not financial advice. Trading crypto is heavily volatile, and you could lose everything. Trade at your own risk and do your own research. On to the news. Signature Bank failed to understand risks associated with crypto, FDIC chair. A related report by the FDIC chief risk officer cited poor management as the root cause of Signature Bank failure. Investigations into the collapsed Signature Bank point toward illiquidity circumstances and poor management. However, the Federal Deposit Insurance Corporation, the FDIC chairman, Martin Grunberg, believes the bank's failure to understand the risks associated with cryptocurrencies expedited its fall. Speaking at a recent United States House Representative Financial Services Committee hearing on oversight of prudential regulators, Grunberg highlighted the recent failures of Silicon Valley Bank and Silvergate, which eventually manifested in large declines in stock prices and subsequent deposit outflows at other banks. A related report by the FDIC chief risk officer cited poor management as the root cause of Signature Bank's failures, while pointing out Signature's over-reliance on uninsured deposits without proper risk controls. Grunberg added, additionally, the bank failed to understand the risks of its association with reliance on cryptocurrency deposits or vulnerability its vulnerability to contagion from crypto industry turmoil that occurred in late 2022 into 2023. Although regulators and banking professionals agree that deposit runs are one of the key drivers of bank collapses, former SVB CEO Greg Becker blamed rising interest rates among the factors of its demise. Absolutely. It's interesting how all these guys are just trying to blame everything on crypto. It's all crypto's fault. This would have been completely fine if crypto wasn't a thing. Except for you guys are doing fractional reserve banking, and you guys know this. I don't even want to get into it because I'll get all bent out of shape. According to Becker, no bank could survive a bank run of that velocity and magnitude. Grunberg revealed that the failures of SVB and Signature Bank resulted in losses of $16.1 billion and $2.4 billion, respectively. Concluding the discussion, Grunberg said that banks with assets of $100 billion or more merit special attention, including consideration of a long-term debt requirement to facilitate orderly resolution. On the flip side, the U.S. Government Accountability Office preliminary review did not explicitly blame crypto exposure for the collapse of Signature Bank. As previously reported by Cointelegraph, many regulators and lawmakers continue to invoke the collapses of Signature Bank, Silicon Valley Bank, Silver Bank, in discussions around crypto, which is absolute bullshit. Look, the reality is if 2% of the people that have their money in banks decided to try and take it all out at the same time, the entire system would fall apart. We all know that. It's all bullshit. It's all a blame game. That's my opinion. Moving on. BlockFi. BlockFi? I always say BlockFi. I hear some people say BlockFi, which I find weird. Anyway, BlockFi used customers' money to buy $30 million insurance, creditors claim. BlockFi said selling its cryptocurrency lending platform might not generate value for creditors. Disgruntled creditors of the bankrupt cryptocurrency lending firm BlockFi have submitted a new court filing in response to the company's latest restructuring plan. On May 12th, BlockFi outlined its Chapter 11 reorganization plan in a filing with the United States Bankruptcy Court in Trenton, New Jersey. The firm said that selling BlockFi might not generate enough value for creditors as it owes nearly $1.3 billion to its top 50 creditors. In response, BlockFi creditors submitted another court filing on May 15th, arguing that BlockFi deliberately took measures to delay the trial. Represented by law firm Brown Rudnick, BlockFi creditors wrote that BlockFi sold about $240 million worth of crypto before filing for bankruptcy in late November of 2022. The creditors emphasized that the crypto lender sold the assets at the nadir, referring to a massive market slump following the collapse of FTX. Liquidating nearly all domestic cryptocurrency in November of 2022 was a very poor decision, the creditors said, arguing that the decision cost more than $100 million in the months since. The creditors also cited unnecessary and undesired tax consequences, adding that the sale amount didn't relate to its bankruptcy. The filing reads, selling $240 million of cryptocurrency was never rationally related to bankruptcy funding needs, given that no reasonable estimate would peg the costs of this bankruptcy to $240 million. BlockFi customers went on to say that the company spent $22.5 million of customers' money to buy a $30 million insurance policy, according to the creditors. That happened soon after BlockFi sold out the digital assets before filing for bankruptcy. By selling everything pre-petition, BlockFi gave itself a near limitless budget, essentially immune from bankruptcy's adversary process, to run its case as long and as continuous as it sees fit, with the typical milestone in a DIP or cash collateral order, the creditors wrote. The plaintiffs called on the court to end the case as soon as possible by passing the estate's assets into the hands of new management. The creditors again stated that such a scenario seems inconsistent with the debtors' case agenda. The people who put money into the bank or the exchange. BlockFi didn't immediately respond to Cointelegraph's request to comment. This article will be updated pending new comments. And last but not least, this tool bag, per usual. The SEC Chair Gensler claps back at... God, we're hip. We use words like clap back, which is like from 2005. Back at Coinbase, says crypto rules are already exist. Speaking at the Financial Markets Conference, the SEC chair asserted that the rules for crypto are already in place and that the crypto sector has been largely non-compliant. I wonder if this dude actually believes his own bullshit. Who knows? The chair of the United States Securities and Exchange Commission, Gary Gensler, has hit back at Coinbase's position, compelling the agency to provide a clear stance on crypto regulation, arguing that there are already adequate laws in place. In May 15th keynote speech at the Financial Markets Conference, Gensler was asked about the dispute with Coinbase, the rules on crypto, and why the SEC doesn't publish rules for that market. In response, Gensler staunchly asserted that the rules have already been published, adding that to make it quite direct, this is a field that has been operating largely non-compliant. There's nothing about new technology that makes it non-consistent with the public policies that Congress has laid out. Gensler argued that the SEC has already put out the rules for what is required to custody assets, be an exchange, broker, dealer, or advisor, and how to register securities offerings with the agency. Let me ask you this, Gary. Why couldn't you answer simple questions when you were being grilled by Congress? Like, is Ethereum a security? You waffled on that I don't know how many times. The SEC's current view is that most crypto assets, apart from Bitcoin, fall under securities definition of an investment contract. If the public is investing money and anticipating profit based upon the efforts of others in a common enterprise, that's a security, he said, adding, there's financial intermediaries, nodes in the network, and they need to come into compliance if they've got securities on their platform. Coinbase and many other U.S. crypto firms have repeatedly spoken out against the apparent lack of clear crypto regulation and the SEC's so-called regulation by enforcement approach to crypto, along with its hostile nature when dealing with digital asset firms. In April, the firm went as far as to file an action in federal court seeking to compel the SEC to publicly disclose its stance on a petition from July of 2022, calling for clear rules for the crypto sector. Notably, the U.S. Chamber of Commerce has also echoed this call from Coinbase as it heavily criticized the SEC's oversight via May 9th amicus brief. The SEC deliberately muddied the waters by claiming sweeping authority over digital assets while deploying haphazard enforcement-based approach, it stated. On May 8th, the Coinbase chief legal officer Paul Grewal also sent a letter to the SEC requesting revisions to the agency's proposed updates to its registered investments advisors custody rule. That is a mouthful tongue twister. Essentially, Coinbase argued that the proposal unfairly targeted crypto companies, provided a lack of nuanced rules for different asset classes, and make improper assumptions about custodial practices based on securities. Other players in the space, such as Web3 venture capital fund Andreessen Horowitz, A16Z, and the Blockchain Association have also echoed similar criticisms to the proposal. Weird that there's so many people saying the same thing, and the only people that are saying there are rules is this toolbag Chair Gensler. Yet nothing has changed. Let me know what you guys think. Comments down below. But guys, that's all I got for you today. Again, not a lot going on. Look at Bitcoin one last time. Yeah, looking like we need that level to hold. All right. Guys, if you enjoy the content I provide here for you every morning, Monday through Friday, on Boring Crypto IO, please by all means subscribe to the channel, turn on the bell for notifications, watch, like, share all of the videos on all of your social platforms, and I'll see you bright and early tomorrow morning. I am out of here.